Hey guys, welcome back. This is the B HODL special of Britcoiners, and we have a special guest. Would you like to introduce yourself?
Hi, I'm Freddie New. I'll be serving as CEO of B HODL alongside my esteemed board right here.
I'm Danny Scott. For anybody listening, this is Britcoiners episode, obviously, but for the guys that are listening for the B HODL information, Danny Scott's Chief Bitcoin Officer for B HODL.
Hi guys, I'm Zakk. I'll be CTO at B HODL.
And I'm Dave, the CFO of B HODL. Right, so we just start straight in at the questions then.
Well, let's just quickly, we've got to give everyone an overview now on take two. Normal Bitcoin listeners, this is what we've been busy working on in the background. It's a company called B HODL. We have now listed that on the Aquis Stock Exchange in the UK. It is a Bitcoin Treasury company with a little bit of a difference, which we'll come on to shortly. And we are back with Britcoiners episode, whatever number we are at now, we do not know. We've lost track. We need somebody here to help us out, don't
we? We kind of miss Molly, which is something I thought I'd never say.
Yeah, that's a shocker.
Yeah.
Molly. So yeah, hopefully this episode is going to be very much B HODL Q&A as quick as we can. We've got lots of questions from the community from when we've IPO'd in the last couple of weeks. So we want to make sure we can answer as many of them questions as we can. We'll see, hopefully we can get through as many as we can. If we struggle to get through them by the end of the time allotment, we will potentially revisit them in the following Britcoiners episodes.
Cool, right, Dave, I'll start reading them out.
Go ahead.
All right, question 1. Does B HODL have a pipe deal?
So in this context, I think the pipe deal, PIPE stands for private investment in public equity, and ordinarily that's done at preferential terms, for example, like a lower price. The answer to that is no. All of our subscribers, retail subscribers or pre-IPO subscribers came in at the same price and on the same terms for the same class of shares.
Excellent. Nice one, Freddie. Question 2. What gives us the edge over other Treasury co's?
I'll jump on that one again on take 2.
You should attention to the fact that it's take 2.
I know. We'll
get over it.
This is the second time we're recording this, everyone.
Because Mikey didn't turn on the video.
Making a point.
And I said some really funny stuff.
Dave was on fire.
Yeah. So a very, very high level, and Freddie, you got a good answer as well, but in terms of the Treasury Go, it's a Treasury Go with a little bit of a difference, and being that, yes, we're going to accumulate Bitcoin like the other Treasury companies, but we are going to make use of that Bitcoin and utilize it to generate more Bitcoin on the back of using various mechanisms, which we'll talk about in the podcast. So at a high level, that's the basics.
And Zakk had a nice...
Yeah, I was just as I said in the initial take, at B HODL, we're very passionate about Bitcoin as a store of value, but also as a means of exchange. So it's kind of very important to us to support that aspect of Bitcoin by, investing in the Lightning Network and generating yield on our Bitcoin, putting our Bitcoin to work.
Cool. Right, I'll move on. How do you plan to acquire Bitcoin? I'm assuming you're relying on an MNAV premium to raise equity and then convert into Bitcoin.
I mean, principally, yes. So I'd look at the strategies that have been developed by other treasury companies, and yes, we'll be looking to explore some, if not all, of the same strategies. It's important to add as well, though, that some of our plans in relation to the Lightning Network that Zakk touched on there will also let the company actually earn money denominated in Bitcoin via the deployment of those various strategies. So not only are we going to be raising equity to acquire Bitcoin, but we're also going to be generating Bitcoin natively via our own operational activities. So we effectively have 2 routes to acquiring Bitcoin, I suppose.
Excellent. Right, moving on. How does liquidity work?
The enthusiasm.
Hey, I'm not Molly. This is what it is. Next question. How does liquidity work in a secondary market? Are there market makers to provide liquidity and a two-way market?
I'll have to take that one again. So, yeah, liquidity is largely a function of the market in which a company is listed. So we're listed on Aquis. Data so far this year shows that secondary market liquidity is reasonably good. And yes, there are market makers that provide liquidity and a two-way market. And in fact, you can't even get listed on a platform like Hargreaves Lansdown unless you have both of those 2 things, sufficient liquidity and sufficient market makers.
I think we have towards 6 already market makers, I think. Now operational.
Quite a few day one, which is impressive.
Very impressive.
Yeah.
Really impressive. I was
Hardgreaves
very happy with that.
Before end of day on day one.
Which is, if you know anything about Aquis, it's quite a rarity, I think. So,
I've been sweet talking them for weeks before.
is that what it was? So taking full credit for a
Freddie new
sweet
charm.
talk.
Yeah. Turning up at their office covered in baby oil.
Wow. Send in free socks, but yeah, we'll give an option.
Okay, I will move on. The company is entering the market at a relatively late stage compared to other BTC treasuries. What factors contributed to the delayed launch?
I'll jump in this one.
It's loads.
That's it's just not true. It's not relatively late stage. I don't. Why people would think that, I don't know.
But we initially wanted what was our timescale? 6 weeks after the initial idea was to try and. Right, we really compressed
as quick as we can. Yeah. I'll come on to that. But I think in terms of the stage, Bitcoin is a long-term strategy. Full stop. Bitcoin treasury companies are not going to be any different. They are going to be a long-term strategy. This is not, the first ones in the UK came about this year. So we are very, very, very early to this still, and I'm sure there's going to be many more after us that are going to be launching from the Bitcoin treasury strategy in the UK and further afield. There's barely any in the world. There's a decent 100-ish, maybe to 200-ish, maybe in the world that are actually operating in some respects. Probably most of them are not doing it in the capacity at a Bitcoin strategy 100% focus as such. And a lot of them have a core business that has completely nothing to do with Bitcoin. So there's very few and far between. So we are not late. I think we are very early, as is to all the other participants in the market at the minute. The reason there was questions around, so just touching on it, which may be a question later. There were delays in our launch planned, as Dave's touching on there, but that was purely just down to admin processes of just ticking boxes for regulatory reasons. It was nothing.
It's quite a big ordeal for a company to go public, right? There is a lot of boxes to tick.
Yeah.
It's not a quick process. There's an awful lot of due diligence and regulatory red tape to get through, which is fine because that at that point when you get through it all, there's a mark of quality upon yourself. So it was good, but there was quite a bit to get it over the line.
And as context, this is the 4th IPO I've done in my career. And to go from where we started to listing in this timescale was the quickest I've ever seen. By way of example, I worked on one for 11 months, which then fell over at the last minute. And that's really not uncommon. Sometimes you'll see companies try 4 or 5 different times to come to market and keep on pulling their IPO because market conditions have changed, for example.
Yeah. Do you agree with the adage that every company will eventually have a BTC treasury? It's just this particular company's been set up to be a treasury co, and
I don't want to nitpick at the terminology of that there, but that's like saying every company has a treasury already at the minute. So, which most small companies tend to just have small cash flow, should we call it?
It's still
not
a treasury.
necessarily.
It's just a terminology, right?
I would treat a treasury as you've stored it in
treasury function,
something of value as opposed to just the cash that you need for the cash flow of the business.
That's still a treasury.
I mean,
you're being a bit picky.
That's why I'm saying I'm nitpicking at maybe definitions and terminologies, but I don't think it's something we need to go down. It's not a question. That's
just Dave's
agenda.
Deviating from the list.
Right. Yeah. Sorry.
Put it in the Telegram.
I thought we could have a conversation about something. Right. Okay.
Yeah, no, we've got plenty of time, Dave. Let's pick up some new questions.
Right. I'm going to condense this question into what happens when the MNAV is at 1. Will we still be able to function?
I'll start with that one. And what do we do to improve the share price? Well, I think, to be honest, I'd actually take a step back and think about what it is that we're doing. We're building a business here. And the way that you traditionally improve the value of a business is to work on the operational side. So if we entered a situation where we weren't able to raise equity, we then focus on the piece that Zakk touched on, which are all of the various different strategies that we have for developing the way to earn more revenue denominated in Bitcoin via our Lightning Network expertise. And in some respects, that's the core element of the business here. In some respects, the methodology of valuing treasury companies via MNAV is a bit of a distraction from effectively how most companies are ordinarily valued. And anyone familiar with company valuations will know that it's far more typical to value a company on an EBITDA multiple or a discounted cash flow multiple basis. And those actually look at the business. So back to the point that Danny made at the beginning, we're not just a Bitcoin treasury company, we're a Bitcoin treasury company that needs to acquire Bitcoin in order to use it in running our operational business. So, and really in terms of generating more value for shareholders, then that is absolutely our key focus. We make the company more valuable, the share price goes up, that means that we can then raise more equity and buy more Bitcoin. It's a virtuous circle.
Mm-hmm. So there'll never be the Bitcoin per share is the big KPI that every treasury company is using, right? So that we're not relying on raises to keep that in the positive or keep increasing that Bitcoin per share.
Correct, because our revenue will be denominated in Bitcoin. So even if we're not, even if we're not raising more equity to buy more Bitcoin, your Bitcoin per share will still be going up simply because we'll be earning revenue in Bitcoin.
Yeah. Okay, thank you for that answer, Freddie.
As I said, I apologise for it.
Hey,
we need Molly. CFO
we need Molly. We do need Molly.
People have never watched Britcoiners before. This would be like, what is going on?
Yeah, who's that idiot? They'll let him back on. Okay, next question. Why it would be great to get a real clear explanation of why behind B HODL, why is bracket a lot of the CoinCorner team doing this and why now? I read that how that was, right?
I could tell Zakk was laughing.
That was a poorly constructed question, whoever wrote that. But I think why now and why the CoinCorner team?
So sorry. So the question about I couldn't understand a word you were saying there.
Well, do you want me to read that word for word again?
I think why B HODL? Maybe if I sort of give a sort of conceptual idea. So really Bitcoin. We're trying to solve two problems here. So a lot of exchange businesses end up holding a lot of Bitcoin, but it's very difficult for them to generate revenue from that because that Bitcoin they hold is essentially customer funds. In order to really do anything with the Bitcoin, it needs to be a company's own property. In other words, it needs to sit on that company's own balance sheet as that company's own property. And so you can't really do what we want to do in terms of developing and building out and creating new revenue generating opportunities on the Lightning Network without actually having our own Bitcoin on our own balance sheet. In other words, it's our Bitcoin and we're going to use it to develop and grow our business and the network at the same time.
Do you want me to give the real world
CoinCorner?
Yeah, the real world example behind the scenes of what happened and where that came from. So Freddie, exactly right. But from the CoinCorner perspective, that's exactly the situation we were in. And people may have known or heard of Alan Farrington from the Bitcoin space, but also from the "Where Does the Yield Come From" t-shirt that he liked to wear. Ourselves and Alan were talking around how do you get native Bitcoin yield? How do you actually generate yield on the back of Bitcoin? That's where the conversation started. That was from, I think, maybe 2 years ago, probably about 18 months ago. We started actively exploring opportunities of what you could do. And that's kind of eventually what snowballed into what is B HODL today. So it was a accumulation of conversations, thought process, and experience over the last few years. And that's what came about to create B HODL.
Fundamentally, like the CoinCorner team is predominantly made up of people very passionate about Bitcoin, right? So if you can get Bitcoin, if there's trapped capital in people's pensions, ISAs, and various other bits in the UK, and you can make a functional entity that promotes Bitcoin properly in the way you'd want it to be seen, then that's great for Bitcoin, is how I see it. And like, I'm passionate about Bitcoin. I want Bitcoin in as many people's hands as possible. And I always have done. And that's why I'd like to be involved.
Yeah, it further legitimizes it, particularly in the eyes of money managers, wealth managers, investors. And I mean, we'll go on to talk a little bit about our 1% allocation, but that's an absolutely key part to being integral to growing not just the network, but also Bitcoin generally and its acceptance in the UK.
Yep.
Okay, moving on. Other than Lightning routing fees, what Bitcoin services are you considering offering either in the short or long term? How much detail we can go into that, actually?
Well, there's already information in the admission document, so everyone can go and read that and check out more information. So there's a couple that we've highlighted, being there's a concept around Bitcoin-backed loans, there's a concept around mining, there's not mining ourselves, but effectively, I don't want to call it front running, but subsidizing sort of the Bitcoin miners themselves, pre-finding blocks and pre-blocks being spendable. So there's an opportunity there. There's other couple of opportunities around that we're looking at. We're going to explore these over the next 12 months, which is all in the admission document, and you can see that. However, initially, the Lightning side is where the team here has the most expertise, and that we believe, as touched on, Freddie and Zakk have both touched on, in terms of Lightning Network being a payment system, and effectively building out the future of the financial system from that. This is the grassroots element now where we're starting to build this out. This is laying the cables, as we discussed yesterday.
That's such a disgusting
I'll let
term.
Freddie. I'll let Freddie.
It was a
You said that somewhere.
well in the nicest possible way.
Yeah.
We were chatting earlier. The idea, and credit to David Parkinson from Musket for this. He said, and we rather like the image, if it's the late 80s or the early 90s and you told people we're digging up roads and we're laying fiber optic cables and we're also buying up a bunch of warehouses and we're building data centers on the outskirts of towns, most investors and most people would have thought you were a lunatic. Mm-hmm. We have a very, very long-term vision, both for Bitcoin and for B HODL. And integral to that is what Zakk touched on earlier. Bitcoin's not just a store of value, it's a means of exchange as well. And it's not just a means of exchange between us in this room, it's potentially a means of exchange for everyone on the planet. But that's not going to be possible unless companies like us lay the groundwork and build the infrastructure and make it as robust as humanly possible.
Yeah,
I actually spoke for the first time. I've not spoken to David from Musket before.
Let's focus on the questions. But
I know,
I'm
really interesting,
I'm happy
passionate
for you.
Bitcoiner.
Yeah.
No,
He's a
I
really
enjoyed
hardcore
it.
Bitcoiner.
Yeah, it was a great conversation.
Yeah, that's great.
Yeah.
Anyone else you spoke to?
Yeah, there's quite a few people. Ashley Giles, really interesting. Actually, very good cricketer in his day.
That's what I hear.
Yeah, unbelievable. He played against some great players. Should we crack on with the next question?
Yes, please.
Yeah, okay.
Well, one of the things, actually, one of the questions we haven't touched on here, we were beating around the Lightning Network and being what that is, but that's one of the big questions we keep getting asked about the Lightning Network side of things. I appreciate it's probably in the questions further down, but I know it's been an important question, so I don't know if we want to jump into that now and just explain, in some respect, what we're doing with the Lightning Network for people that are misunderstanding how revenue is generated, I guess, on there. If that makes sense.
Do you want to take that one?
I can.
Yeah, go on, Danny.
You can't ask and answer your own question. Zakk, you answer that question.
This is my show, Dave.
Yeah.
Okay, take it away.
Okay. The idea, Lightning. So what I think most people are thinking from a Lightning revenue perspective is the routing of a node. So you have I'm not going to go and start explaining what Lightning is at the minute for people that want to know. Obviously, there's plenty of content out there, and we can also provide information for that in the show notes, hopefully, Mikey. But the idea is people think you're just locking the Bitcoin into the Lightning Network, and then by routing, you're generating the revenue and the fees. At a basic level, yes, that's true and that's correct. However, there's a lot of complexities that go into it, and it's not quite as simple as that. We at CoinCorner have been running Lightning nodes for the last 5-6 years now. We know the intricacies, I guess, and all the nuances of everything around Bitcoin Lightning, the problems, the solutions, the opportunities of what you can do. That's where the expertise comes together here to generate the yield on the Bitcoin Lightning side of things. We have towards 7 strategies, I think it is now, we're just going through today in terms of different types of Lightning nodes and how they work and how they generate yield. If you look out there, there's already services that you'll see. Lightning Labs have Lightning Loop, which effectively it's a service that allows people to go move their liquidity from Lightning back onto on-chain without closing the channel that they have open. So Lightning Labs obviously take a fee for that service, and people are paying for that service. There's things like inbound liquidity sales, where there's marketplaces like, which I think we've mentioned in the admission document as well, in terms of Amboss. And they have a marketplace where you can sell or buy inbound liquidity to other participants in the Lightning Network. So there's opportunities there. It's not just necessarily the core of just routing fees and that's it. There's lots and lots of different mechanisms and services and opportunities around Lightning. The best way, I think we spoke about this again yesterday on the podcast, and if you have to think like Freddie's example there of laying the cables, as Dave enjoyed that terminology,
I didn't enjoy that.
Creating the internet back then, you didn't realize that what the internet would become, and you didn't realize all the services and the companies that are built up around the internet now. You think anything from even web browsers to search engines to streaming services like YouTube or Netflix, or your smartphone and all the apps that are built on your smartphone and the games that come with it. Like, they were not a thing in the 80s and the 90s. And it took that infrastructure and that foundation layer to be built, which is Bitcoin being the foundation, Lightning then being this opportunity now to be able to scale that foundation into a much larger capacity, and to hopefully a global scale as well. And that is, we are basically starting to look at and offer them services, then pick and shovels as such, now, and starting to build them out. So as more people building around, we are there to be the service to them for liquidity purposes, for services similar to like the loop and things. There's so much to be built out that it's hard to say sometimes. Like we can't, back in the 90s, you wouldn't have predicted a smartphone with an app on it.
No.
But now that's the thing, it's there, and everyone takes it for granted. But you need them companies, them entrepreneurs, and people that build.
I do get annoyed when people say that Lightning wouldn't be a thing for the next 10 to 15 years. Like that, to me, like people always put that bracket on that it's not going to be, maybe Bitcoin would be, like someone's got to be working on it now for that to be true in 10 to 15 years. Like if everyone just sits back and goes, I'll wait for 10, 15 years and then Lightning hopefully will be a thing, Bitcoin payments will be a thing. Well, that'll never get done. You need companies like us who have been in it long enough, who recognize it's a highly evolving space to go, actually, if we get involved now and do what we know and channel our energies efficiently enough, then we can make that happen in 10 to 15 years.
I think it's important to look back at the history of the internet as well as a really good analogy. So Eisenhower, from memory, created ARPA in 1958. And then the ARPANET grew out of that creation of ARPA across the 60s. And then Vince Cerf was instrumental in creating TCP/IP in 1974. This is a hell of a long time before MS-DOS came out. And the idea that you would have a smartphone in your pocket that could access all of the information on the planet. These things take an enormously long time to build, and in analogy terms, we're probably at the 1974 stage of the internet. The amount of potential growth here is absolutely gigantic, and we want to be an integral part of that. And when you think about how big the potential market is and how big the opportunity is, that's when I get really excited.
Yep, definitely. I think you could even look back at the history of just the Lightning Network on its own, right? Over the few years it's been live on mainnet, it's brought it up to a $400 million capacity network, whereas in the early days, like 80% of payments were failing. It wasn't really accepted in many places. Now we're seeing it ossify to a level where other people are building on top of the Lightning Network. There's other layer 2s using it as like an interfacing layer between themselves and other protocols. So it is really starting to mature, and I feel like we're close to an inflection point of growth with the likes of Tether coming on and that. Sorry, no. So I was going to just pick up your comments from yesterday, I think, on explaining the interface between, like we said, with the layer, I don't want to call them layer 3s, but other layer 3s and other layer 2s in that sense, of they are actually making use of the Lightning, as opposed to competing with the Lightning Network.
Like
they're actually
Arc and eCash, both Cashew protocol.
Yep, they're all making use of Lightning to integrate with and to communicate with. So it's already naturally just becoming that integral, very important part from Bitcoin on chain to a off-chain scalable piece of technology, effectively. So it's happening without people realizing, which is exactly how the internet scaled out.
So just to be clear, we're all extremely bullish on Lightning. By the sounds of it.
So.
Good stuff.
Can we get that on the merch?
Yeah. Right, next question then.
Sorry, not next question.
Please.
I'm trying to encompass the Lightning-esque piece in this. Sorry, Mike, if my mic's still on. I just knocked it.
Oh, yeah.
The other piece, people
It's
then are
still on.
asking, asking for forecasts and things like that in terms of how much revenue we're going to generate on Lightning. It's a question people can ask. We're a public company. It's not something we would be disclosing in terms of forecasts and predictions, I guess, should we say. So the best thing we can do, obviously, is one of the things we've, in the admission document, again, we did disclose the market at the minute and the ranges that we were seeing from other companies out there. The low end being the 1% region, which was River Financial from the US, Bitcoin Exchange. We had there was a 3.5% from Bitrefill. There was a 9.7% from Block / what's the name
Cash
of
App?
What's the name of the actual
Square.
company?
Which
You
one?
were
C equals?
C equals. Incredibly weird name.
They
Yes.
change the name every 3 weeks.
C equals was the subsidiary of the one that generated that. And there's a couple of others as well. We've seen disclose a few in that range. So that's the range that we've seen publicly. What we will obviously look to do going forwards, we will disclose sort of figures and facts as we can, I guess. Best way to describe that. We'll going to be exploring, as I mentioned earlier on, there's like 7 different strategies we're currently looking at in terms of how we run these nodes. And then as soon as we can, we'll probably start to announce various methods and what they are performing like.
Something we can do is probably get a research paper published. I mean, that's something we could look into. Like a lot of the TradFi guys in the city probably would advocate that. In terms of it's a way that they can have their basically research lightning and say this is the potential of it.
It would have to be on the Lightning Network in itself as opposed to strategies around actually generating revenue. But there are strategies, but I think a big part of what we've been talking about earlier on, in the sense of, okay, there's 7 strategies I'm talking about here, but they're almost trade secrets in how and what you do with them. So it's not something maybe that we would ever disclose.
It wouldn't be on that, but it would be on like Lightning potential growth and what it could be in terms of how it rivals MasterCard, Visa, and etc.
Yeah, you're on the question before, Dave, but good. But thanks for keeping it.
Okay, I lost track. I literally glazed over when you started talking. Right, scroll up. Let's do the next question.
Hopefully that answers people's questions on it, and I appreciate apologies that we can't just give projections and forecasts for what this looks like, but we will release numbers as soon as we can.
Nice one. Right, when would you expect to have purchased your first Bitcoin for B HODL?
Well, the announcement went out today. It wasn't just one, and in fact, the man behind it is on the sofa.
The button clicker.
The button clicker, yeah.
Already done.
Already done. Easily answered.
Just to clarify, there will be no volatility risk management in place except for the 4-year cash buffer. It's a Dave question.
There's a Dave question.
You've answered
what the
this.
hell does that mean?
You've already
the ultimate risk management already in place for 4 years. What else do people want?
I thought this was a bit odd. So there's a lot of questions here around volatility risk management, hedging. Are they talking about buying
Bitcoin.
a default swap or
Yes.
buying a product to hedge against downside
Exactly.
volatility?
Yeah. He was thinking that you would be hedging against the Bitcoin price going down, but at that point you're no longer a
What's
Bitcoin
the
Treasury
point?
company. You're just
You're just a bank with exposure to a volatile asset.
Yeah, just to answer the 4 years. So working capital 4 year set aside for a 4 year run rate in terms of so we can survive without a single jot of revenue coming through the company. That is how we've mitigated any risk. So you'll know we'll be around for a long time. Which just seems sensible.
And jumping in on top of that, Dave, we've all got a lot of startup experience here. Startups typically will raise money, and then you may have 18 months to 2 years of runway. The fact that we've got 4 years of runway is, in my personal experience, extraordinary. And you've got to remember that our costs are denominated in fiat currency, whereas our revenue generating activities are going to bring Bitcoin into the company. So it's arguably extraordinarily prudent to keep the currency that you're going to need to pay for your running costs available, so that you don't suffer a forced liquidation event. And I always return to, there are 2 broad types of insolvencies: balance sheet insolvency and cash flow insolvency. What kills you is cash flow insolvency, not being able to pay your bills when they fall due. We've made sure we're going to be able to pay our bills when they fall due for a full 4 years. That's your downside volatility hedge.
I know it's a great position to be in from my point of view. The freedom and flexibility that allows us is absolutely phenomenal. So it's such a positive from my point of view. For like 4 years to get.
To highlight on that as well, there's other questions I think we may come to later, but we can skip. But the sense of that people are asking them, why are you keeping some cash there and not just buying Bitcoin with it? Because if you believe Bitcoin's going to go
please everyone, can we?
You can't please everyone in some respect. But what we've, as Freddie says there, we've all been in startups, but we've been in. We've had 3 bear markets, haven't we? And we believe that maybe if we, in the next 4 years, we do hit a bear market, we are prepared. We've been through this before. We know what it entails. We know how to deal with a bear market, and we know how tough it is. I think people saying, well, why don't you just buy Bitcoin with the 4 year buffer? Have they ever been through, ran a Bitcoin company through a Bitcoin bear market? It's brutal. It's absolutely brutal. How many look at Binance laying off 40% of their staff, was it last bear market? Coinbase laid off 30-40%.
I mean, if people aren't aware, like people might not be too familiar with CoinCorner, right? They did we're a smallish exchange, but we have been around for that long. We have experienced that volatility, and as Freddie alluded to, like cash is king. It's just a cash flow forecast management gets you through these things. So I'm extremely happy that there's 4 years worth of cash buffer, and I think it's a great volatility risk management procedure to have in place.
Takes a lot to make Dave happy as well.
Yeah, that's as happy as I get.
Yeah.
Anyway,
Sounded happy as well.
You'll have to change his pitch on the mics.
I could put a happy inflection on it.
Yeah. More importantly, when merch.
Are you reading the questions out now?
You're too slow. You're too slow.
Too slow.
Yeah.
I've had to sit through his answers and I'm through his questions. Right. Most important question: when merch?
We'll come back to it.
The merch thing we're coming back to.
We'll give you guys
antsy about the time
information when we can. No. I mean, we'll come back to it in the next episode or two.
Okay. You can read that one out then.
That's a big long one. Can you help me understand it? It wouldn't make sense. I
think we've hit that one. That's on hedging.
Done that one. We've touched on the Bitcoin yield as well and the Lightning Network and that was coming. Also, people saying seeing the 9%. Are we aiming for that or are we aiming higher? Like, of course, any company in the world, we're gonna aim for as high as we can in terms of the yield and generation side. So yes, we'll aim for higher. There's people also asking around whether it will come. The more obviously the bigger Lightning gets, the more participants take place, then the competition increases. That means then that the theoretical race to the bottom in terms of the fees, will that 9% drop down to 8%, 7%, 6%, 5%, 4%, etc. And in theory, in any market, yes, then the more competition, the more fees get squeezed and rates come down. That doesn't mean to say it's not going to find an equilibrium and we're going to end up with a balance, because I think that's what you'll find eventually. And the most skillful, the most experienced, I guess, in some respects, and the ones with the edge will succeed, as we see in most industries.
Would you kind of just to point out, I know you're in a rush, but is it worth pointing about that, like, Lightning isn't just about specifically root nodes, just as aren't about low fees. Like, it doesn't necessarily mean it's the most popular node, the lowest fee node. Like the positioning of stuff like this.
No, I'm not talking about the node as such and the fees in that sense. This is just
if you're saying it's a race
yields.
to zero, I don't buy that either.
There'll be a race to zero. No, I agree. But there's lots. It's the services and things like that. It's like you go and end up using a company, you'll pay more at one company than the other company because the customer service
that's what
is
happens
better,
in a
for
maturing
example.
market.
And the routing is not just routing. There's, as we touched on before, things like Lightning Loop. And if they offer a better service than somebody else, they could charge a higher fee.
Conversation for a different time. But
yeah.
I think the takeaway is there are other ways of earning revenue from our Lightning Network activities rather than solely routing.
Yes. Yeah. And it's very, very, very early days in terms of the size, the scale of this market, and what we've touched on many times already in terms of the market size opportunity. Sorry, I don't know if Zakk is going to have an article coming soon.
Oh yeah, I've got a blog post just on the...
Oh, cool. Where will we be able to find that blog post?
blog.bhodl.com.
Beautiful.
Nice segue.
Yeah, just detailing the history of the Lightning Network, present day Lightning Network, and potential future of the Lightning Network.
We hope it's a TLDR or executive summary.
Because that's all he reads.
Straight to it.
But the TLDR, in some respect, the market opportunity is any money, any value that is moving around the globe. So when you're talking SWIFT, Visa, MasterCard, Western Union, etc., even local payment rails via banking systems or TradFi systems, that is the market opportunity for Bitcoin Lightning. And that is massive. You had some stats on it of how many quadrillions.
I haven't fact-checked these, but I read an article a couple of days ago that said that every 3 days, SWIFT moves an amount of value equivalent to the entire world's GDP every 3 days. Wow. So you're talking, the movement of money is an enormous market, and if we can eat into that even to a small degree, that's a huge opportunity.
1%, it'd be crazy. Yeah. So if we're talking 9%, that's absolutely ridiculous. So obviously, yes, the 9% will no doubt get squeezed down, but even if it's squeezed down to 1% and you can take a small piece of that, it's incredibly big. So I think I actually highlighted and pointed out to one of them responses was, you look at the cards, MasterCard, Visa card, American Express, and the other ones in the US, I can't remember what the other ones were now.
Discovery.
JCB and Discovery, yeah. And the Discover one, I think, was it Discover that was still like an $86 billion company or something ridiculous? And
a very small percentage.
They're like 2% of the market in the US, yet they're worth that amount. You know, that's just goes to show having a small percentage of a market sometimes can be an incredibly valuable company. So yeah, there's too many moving pieces and to this puzzle of the scale we're at the minute is so tiny. There's so much further to go.
Oh, you ready to move on?
Sorry.
I thought you were just going to list every card company there was in America.
I'd run out of steam.
All right, yeah, could tell. Who's your demographic? Any TradFi will be thinking on the same lines as VCs?
Well, I kind of take issue with that second piece of the question. VCs have a very different investment horizon, and they have a very different approach to investing. And I'm speaking as one who spent a lot of time in VC-backed companies. Any TradFi will be thinking along the same lines of VCs. TradFi includes companies with an extraordinarily long time horizon, like a pension fund. One of my clients in private practice was the Canadian Pension Plan Investment Board. They specifically used to invest in infrastructure businesses because they liked that they could put money in them, and they had relatively predictable cash flow over a very, very long time horizon. A lot of VCs will be people just effectively taking a punt, rolling a dice. Maybe you'll invest in 100 companies and one of them will come through and make bank for you. That was sort of Peter Thiel's approach to investing that he sets out in 0 to 1. So I don't really think that I don't really think that question has been fully developed. Or no offense to whoever wrote it down. I think that the answer to the question is that there are many different types of institutional and TradFi investors, and the trick is bringing that Venn diagram of your company and your business within the Venn diagram of an institutional investor.
Mm-hmm.
Okay.
Completely agree.
Next question. Adam Back owns 25%. Is this true?
Yes.
Yes, that's true.
It's on the website. All the cap table for the larger shareholders, directors, etc., are all on the website.
It's also in the listing announcement on the RNS.
Can we say we've been friends with Adam Back for quite a few years?
Yeah.
Is friends a bit too close?
I'd just say thank you to Adam for backing us, trusting us, and supporting us through this. So yes, thank you, Adam.
We have worked with him and conversed with him quite a lot over the years, haven't we? So friends is that's how I thought. All my
Dave wants to be best friends with Adam. I think is what we
I've got thousands of friends.
Yeah.
Next question: how aggressively will you be raising funds to buy more Bitcoin?
Well, I think as aggressively as the market allows, really, isn't it? And with a caveat that all of the focus is on what's in the best interest of the company and what's in the best interest of shareholders. So as aggressively as we can within those parameters.
Mm-hmm. Exactly.
Okay, is there an MNAV tracker?
Yes, coming soon.
Mm-hmm. Coming soon.
It'll be on the website. We have a statistics page that will be launched soon.
Analytics page coming. Looks quite nice. Next question. I'm unable to find the info on the admission documents of Treasury custodian details of any interview spaces which have mentioned it. Will the Treasury be held over multiple custody partners? And if so, who has direct access?
But that's probably not something we'd fully disclose to anybody.
That's an OPSEC
which
question.
Would be incredibly silly of us. But we are going to disclose custody information hopefully in the coming weeks or months ahead.
I think there's an opportunity to be more transparent than most Treasury companies. Let's touch upon that maybe.
Yeah, we can perhaps say that we aim to be as transparent as possible and minimize our reliance on third parties. We can probably say that at the moment. Mm-hmm. We'll need to withhold full details until we make an announcement.
Mm-hmm. It's great having a lawyer on board.
That's what I'm here for.
Beautiful. Treading on those eggshells like a little ballet dancer. Right. Next question. How many BTC do you plan locking into the Lightning Network?
I've already actually answered this one today on Twitter, I believe. But yeah, just as many as possible within reasonable effort and reasonable logic and sense, I guess. It makes no sense to lock, if we've bought 100 Bitcoin, it would make no sense to lock 100 in and not have a plan of attack and not have much of a yield and generation on it. So it would be a common sense approach to how well things are performing. One of the other things as well we didn't really touch on in terms of when we say lock into the network, you could lock in and loop out, or lock in and unlock out and close your channels, etc., and cycle them round. Similarly, when you're selling inbound liquidity to people, if they're looking to buy it, that maybe you sell that for a 30-day period. So that's locked in theoretically for a 30-day period, and then the channel's closed and it's freed up again. So there's different mechanisms. It's not just lock it all in and walk away. There's too many moving parts to that beast to really give you a straightforward answer, unfortunately.
Okay, these next few questions are repeated and already been answered. So I might jump straight to the bottom one there. It seems to me that gradually deploying that capital over the first month to generate the flywheel could have been a better strategy than jumping straight into 150 BTC. Can you indicate why you chose not to do this?
So I think somebody's asking here that why did we not raise 5 million to start with, then keep 5 million back, and then keep another 5 million back or so? I assume that's the question. It's a bit unsure of what the point is there, but I think that's just there's not really a way to answer that in a way I can.
No.
Well, we also didn't jump straight to 150 BTC, so there's a factual inaccuracy in the question. Just putting that out into the...
Sure. That's why we have the lawyer.
Yeah. Maybe just ignore that then. Is that pretty much...
I would move on from that question.
Yeah.
I would.
The new subsection of points to explain.
Why is... Sorry, Dave, I stole your thunder there.
No, I think Danny's broken. Like, we're all taking it in turns now to be presenter, Freddie, so I'll let you jump in.
Oh, yeah. So the quick question here, we had one of our friendly commentators on Twitter wrote a business plan for us, suggesting that what we should have done was to IPO CoinCorner instead. Danny, why didn't we IPO CoinCorner?
So I've made so many notes on this as well. I haven't got them in front of me, but
just spitball.
Just a very quick spitball. So one. CoinCorner has a group of companies for one. So when you're listing a company, we've gone with the fresh entity for one, which allows a nice clean start for everything. If we were to list CoinCorner, it'll obviously 11 years with history, but there's how many do we have? 6, 7 subsidiaries under CoinCorner, the group as such, in different jurisdictions around the world and different regulatory regimes under regulatory regimes. So it's a little bit more complex. It would have been a lot slower. We have to have audited accounts for the whole suite up to date, ready, as Dave will, I'm sure, touch on at some point. In terms of what we would be required to list, it would just be chaos from there's one angle. We have other angles in terms of what we can and can't say from a CoinCorner perspective, from a marketing side. The regulatory regime, obviously from the FCA in the UK, has been a struggle, should we call it, at best, for how you can market Bitcoin and the financial promotions that they introduced 18 months ago now, was that, I think?
They made the financial promotions regime applicable to Bitcoin.
Yeah. Which really started to squeeze companies like CoinCorner and other companies in the industry, and how you can market, what you can say, what you can't. It goes as far as the FCA are looking over your website for wording. You can't use things like easy, quick, anything like that, where it refers to something that is quick and easy. For example, to go and buy Bitcoin, you're not allowed to make use of them terms and that terminology. So the point there is the scrutiny we're under from a regulatory perspective, because of how overseen now CoinCorner is. It would be a minefield trying to launch that as a Bitcoin treasury company at the same time.
Yeah, can I just touch upon something that I think might be missing here? Like CoinCorner is built as efficiently as possible to be a Bitcoin exchange, to exchange fiat for Bitcoin for as many users as possible, as many jurisdictions as possible. Then that isn't the same as a treasury company being built as efficient as possible to accumulate Bitcoin. They are different businesses. So if you try too hard to mix them two, you're just going to get inefficiencies in one business model rather than two very efficient business models. So I don't agree that like CoinCorner should have been IPO'd. I think that having B HODL as a clean new company creates such a great opportunity to be the most efficient treasury company that's ever been created in terms of the working capital, the overheads, and what it does. So I don't agree that would have been the right route.
That was my point 4. So thank you.
Great minds.
Wow.
Got a thank
Me and
you
Dave
from him.
rarely agree as well.
Yeah.
That's a good one. There's a couple of other points as well, but I think
we've got about 10 minutes
We've
on the
covered.
clock.
We've covered that. I think well enough. The one of the next ones, the tweet, which is James's highlight there. That was actually quite useful just to touch on. I wanted to just point out some of the inaccuracies, I guess, in some respect for this, just to help educate others around it in terms of, we've already touched on the Lightning Network and the yield generation that can come from it, and people thinking that's not correct. Liquid, we know we've seen from the Canadian side, and I think they only generated, I don't want to speak wrongly, so I apologize in advance if I get any of these numbers wrong for Liquid, but Liquid generated, was it $5,000 in revenue last year, I believe, from a Lightning yield perspective. Now, I think something that people are missing with some of that as well, of what they're seeing there. I don't know behind the scenes of what's going on there, Liquid, but Liquid's volumes and numbers outside are actually quite impressive and quite big. So to give them some credit there, they do release volumes in terms of transactions going through some of their nodes and certain things happening. And you can see they've probably had a very low fee structure, I would hazard a guess. Zakk, if I'm speaking out here, please correct me, because you've digged into this deeper than I have. And that means that maybe you'll see this traditionally maybe in some of the VC-backed companies where they have incredibly low fees and try to scale out to then eventually increase the fees at a later point to create this break-even point and then profitability. And it felt a little bit, when I was looking at Liquid, a little bit like they've done something similar in that respect, where they're trying to help grow out the network first and not focus necessarily on the revenue aspect of things initially. And revenue comes later. I think you always have the Russ Hanneman quote from Silicon Valley of, don't go with revenue. And
you can be a pure play.
Yes. Nobody wants VCs, don't want revenue. They want scale. So there's a part of that. There's the other concepts around in this tweet is about the 3,800 Bitcoin that are locked in the Lightning Network, and then thinking you can only make the 2%, or I think whatever people were commenting around, of 3,800 Bitcoin in a year, but that's not necessarily the way that works. We've already touched on, it's not just locking the Bitcoin in and that amount of Bitcoin routing. That one Bitcoin you lock in, for example, could actually route through in a month 100 Bitcoins worth of volume, which is then 100 Bitcoins worth of transactions, in theory, that you are making a percentage on and potential yield on. So it's not
scalar to the amount of Bitcoins locked in the channel, in other words.
Yeah, it can go back and forwards as many times as you need and required. And I think there's just so many inaccuracies to it in terms of, we've already pointed out the Lightning Loop and the Magma and the selling the amount of liquidity. There's lots of different mechanisms and services and things around Lightning now. It's not just necessarily about the routing aspect.
And again, think of how many businesses are built on the internet.
Yeah.
Think of how many potential payment opportunities there are in the world. That's the product of this kind of company.
Yep. The vision maybe that they're not seeing, that I guess we are seeing that vision. We have a different vision to a lot of these, but that's because we've spent a decade plus in the industry understanding Bitcoin, understanding the financial system, and understanding hopefully where this technology is going to go.
That's why we're building early on the Lightning Network.
And also as well, just to highlight on that, they're saying about I've only just seen that at the bottom, to pay the team in terms of the salaries and things. Like, obviously it's all public information that, but we are very low paid, shall we call it, in terms of the team here, of what we're doing for the...
We can give a number.
The time we're putting
10K a month each.
Yeah.
For you guys. So 10K a year each for you guys. And I'm the only one who's on an actual salary, because I'm essentially full-time in the business, and I've taken a pay cut to come and join us.
Yeah.
No, if I'd stayed in the city as a corporate lawyer, I'd be on 7 figures a year by now.
And we only have, is it the overheads, Dave? Correct me if I'm wrong. £500,000 a year, roughly, is the overheads, and that's.
We'll be keeping it lean. It's one of the great joys in my life, is to make sure that businesses are run lean and costs are cut and people travel appropriately and money is well spent, because every penny we don't spend, on travel, can be put into Bitcoin, can be made to work for us. So that's.
I'd like to see the salary difference between our team versus lots of public companies. The way that we've done this purposely we are incentivized.
Well, I am going
the shareholders to increase this.
When we do have some more data behind us, I am going to bring out like the purchase cost of our Bitcoin over the expense ratio that we have for the company. Just to look at, so you can kind of measure the efficiency of how much Bitcoin, the price it's actually cost a business to purchase the Bitcoin is an interesting measuring because it's all public. We can share that information.
I quite like that.
Yeah, it's like the cost of capital.
Exactly that. So it's just, this will be a very lean endeavor. And, I enjoy driving that.
Which we
Next question.
Good luck, Freddie.
I have about 4 minutes.
Last one.
maybe 5 minutes. One last question. You choose.
This is also, it's all one.
Is that one big?
We've already actually explained this. Is when will you be able to clarify how much we're making
nodes,
on the Lightning Network nodes, which I think I've touched on already.
Oh yeah, I think we've covered that one.
We'll hopefully aim to get this out as soon as possible, but obviously we can't operate as such until day one, which was a couple of days ago, and then we'll probably need a bit of time to effectively get things up and running, and to be able to disclose something. We don't want to disclose some numbers or some figures with a week's worth of data. We want a little bit more substantial to hopefully give the market a bit more of a...
It'd be so crucial how we present that yield data in terms of it understandable, digestible piece of information, because it's really important to me and the public that gets understood properly. So we will be taking time with that data to make sure that is... like there's no stone unturned in terms of how clear and the clarity we can offer to that piece of information. So I look forward to getting that data out, but hopefully we'll do it in a good manner.
Mm-hmm.
And finishing off as a lawyer, which I know people love to hear from us, you as a public company, you should only put data into the market if it's sufficiently precise. Mm-hmm. And we think we'll need at least a month worth of initial testing in order to have information of sufficient precision and accuracy to be put out into the market.
Exactly.
Mm-hmm.
Very good.
Cool.
I think we're all done. Enjoyable.
I think, I did some other notes, but I think we can touch on them in the follow-on Britcoiners episodes, which are more relatable, I think, to CoinCorner side anyway. So, I think hopefully everything that we've seen so far answered for the most part. Mm-hmm. If there are other questions that we've missed, please still fire them in and we'll try and cover them on the next episode.
Any questions welcome. But by and large, this has been a largely enjoyable process, and the questions and the support we've received has been overwhelming, I think, in terms of people wanting to support this endeavor and getting behind Bitcoin and getting behind the team. So it's a thank you from me almost to say, let's strive forward and make this the success I think it can be.
Mm-hmm. Yeah. Thank you.
Thank you, Dave. That was...
I don't know where that came from.
Pull it out occasionally.
Thank you, Dave.
Maybe feel all emotional.
Thank you.
Thank you, everybody.
Cheerio.
For
Thank
listening.
you, guys.
Thank you, guys.